What's up, guys? Welcome back to Mitchell Markets. Today we're going to be going over an important part of trading, investing, retail investing, doesn't matter, but you need this for your charting and execution, and that is EMAs or moving average exponential or exponential moving average. Depending on what platform you're on, the name may slightly change, but universally is known as EMAs. So as you see, I have this ASML 3-month daily chart up, and this is what most traders will be looking at, most retail traders, investors, and but if you're not going to be paying attention to the EMAs, guys, the exponential moving averages, you're missing the heartbeat of the market. And today I'll break down why EMAs are so powerful, and how I use 50, 100, and 200 EMAs to help predict moves in the market, and just clarification for entering and exiting my trades, and just that added hypothesis on top of that, guys. Now, I do use more than these EMAs, but I think this is a good start, especially if you're new to EMAs or learning about using them and how to apply them in trading and charting and investing in general. Then we're going to just be sticking with the 50, 100, and 200. They show a lot more clear action rather than day trading setups that I am typically using on futures, MES, or options day trading. Okay, so what EMAs do, it's kind of smoothing out the price action in the market data, and instead of looking at every tick and getting lost in the noise, you're seeing the real momentum of the security or stock you're looking at. Is the market trending up? Is the market trending down? Is it stalling out? Is it kind of banding back and forth? Goes over all of these things and shows you how to predict the direction of the market and whether there's momentum on your side or against your side. So the order of these EMAs that we're going to be going over, 50, 100, and 200, are set like this for a reason. The higher the EMA, the higher the conviction. But once you start getting past about 300 EMA, you're really just looking at a flat line, and you're not going to see much price action at that point. So we're going to usually top off around 250, but for the sake of this video, we're going to stick at the 200 EMA. One of the highest conviction rates is the 200. 100 is decent, and 50 is very good for mid to even short-term trades, depending on what time frame you're looking at in the market. So for the 50 EMA, you're looking short to mid-term trend guide. You're thinking day trades, some swing trades. They kind of use it to just judge momentum of the underlying. If price is rising above the 50 EMA, you're usually in bullish territory. Vice versa, if it's rising below, if it's trending below the 50 EMA, you start going for a reversal or even bullish territory. So what I'm going to do here, guys, I'm going to add the 50 EMA onto ASML, and we're going to take a look at 50 EMA, which on IBKR is moving average exponential for any of my people on Trader Workstation. Okay, boom. We got our 50 EMA on, and this is in blue. So look at this price action, guys. Look at this. Look how it follows. You have some chop here. You get a breakdown below, bearish territory, and comes back up. And one thing important to remember is when you're looking at EMA, since that's the average of the price action, it's always going to end up trending back toward the EMA, whatever one you're using. So that's another key factor when you're looking at EMAs. It always likes to be next to the price action. It's always going to follow it, just depends how closely. So with this 50 EMA, you're seeing some breakdowns, breakouts above, massive breakout above here. And the 50 EMA, as you can see, you can also get a lot more chop. You can get a lot more noise with the 50 EMA. And I think you'll start to notice a trend here.
Market data connection lost. Market data connection re-established.
Okay guys, now the 100 EMA got it up there in green, and this is more of a midterm line in the sand, okay? It filters out false moves and helps confirm whether a trend is actually strong. When price respects the 100 EMA, institutions are paying attention. It's not as fast as a 50, but it gives you clear conviction. And I like to use the 100 EMA sometimes on days, even on the daily chart, on a 5-minute candle. Now this is one of my favorite EMAs, the 200, the king basically of EMAs. This is a long-term trend indicator. Big hedge fund, even algorithms and programmers are watching this line. If price is above the 200 EMA, you're in a long-term uptrend. If it's below, you're going to be in a long-term downtrend or bearish territory. Breakouts of 200 can make big influences in the market. So we're going to take a peek here at this 200 EMA on this 3-month, and look at this. There's essentially two breakout points on the 200 EMA, one of which helped influence my contract sizing for ASML in particular. As you look back about 3 weeks ago, I was using the 200 and 250 EMA for this very short-term big gain option trade for ASML. So we have a breakout right here, and if you look, it's almost a cross on all EMAs, so in some instances can make it even stronger. Now EMAs are not the only thing you should be using when deciding to enter or close out a trade, but they are a big influence in together trades and setups. So to back it up a second, the 50 EMA is more short term. You see lots of chop in this blue, lots of false breakouts, some breakouts, much better for short term trading. Then you have the 100 EMA. That line in the sand blocks out most of the noise, but sometimes you will get a false breakout here and there, but generally pretty stable if you're looking for weeklies. And then you'll have the 200 EMA, which essentially has no noise in the market, but when it does break out, it's really breaking out. You take a look over here, false break above the 200 EMA into a massive drop, guys. There wasn't news that helped with this, but being on that 200 EMA just made it that more. And you look over here on this 200 EMA a few weeks ago, broke out above the 200 EMA and continue to shoot up. It can't even keep up at this point. So that's when you're going to be getting hedge funds, institutions, and so on and so forth, investing into the company and really driving the market. So that's why, guys, keep a lookout on these EMAs. Keep it in your pocket when you're looking for long-term, mid-term, or even short-term trades. You need to pay attention to the EMAs.